Good day. My name is Brett Ledouche, and I'm the author of the book Pensions for Palookas. You can buy my book at www.pensionsforpalookas.online, or you can buy the book from Amazon, Smashwords, or Take a Lot. Today, I will be looking at the investment options that you have in your pension fund or provident fund. So, what can I invest in? But before I get to that, uh, there are just a few principles that I want to talk through. Before you decide on where to invest your money and look at specific products, the first thing you must establish is, what do I want to achieve? In the sense that what is the amount of money that I want to retire with? Is it 10 million rand? Is it 5 million rand? Is it 75% of your current annual income? Is it 50%? So that is the first question that you have to answer for yourself. The second one is, what is your available time frame? Do you retire at age 60? Do you retire at age 65? And where are you now? If you are 25 years old, you have a much bigger time frame than somebody who's 35 years old. So this is also important to know what is the time. So the more time you have, the less risk you can take, or the more volatility you can actually allow for yourself, because you've got a longer time frame to work in. The third one, as I said earlier, is what is the products that, how do I want to achieve that within that time frame? So what is my asset mix going to be? What should I invest in that I can, within the limited time frame that I have until my normal date of retirement, achieve my 50% or my 70% or my 10 million rand goal? But what is also important is that you must know what is your risk tolerance. So how comfortable are you with losing money over your investment period? Or what is the type of returns that you want to achieve? So when we look at risk tolerance, it's also important to look at the relationship between risk on the one axis and then reward on the other. Because as you take more risk with your investments, your reward would also increase, but also your volatility and your probability of losing money. For example, if you put money in a bank account, or you keep it in a money market account, you might only get a 4 to a 5% return, but the probability that you will lose your capital is close to zero. If you take a bit more risk and you, let's say, invest in property, that's the fund invests in property that's rented out, you might get a return of 8% per annum, but you have the probability that you might have a property that's empty for a while and doesn't generate any income. If you go and you invest in listed shares on the Johannesburg Stock Exchange, you might have a 20% positive return, but you also might have a minus 15% return in another year. So it's very important for you to decide what is the amount of risk that I need to take or want to take to maximize my reward. Okay. The next thing that I will look at is, what are the types of investments that I can actually invest in through my pension or provident fund. And I've categorized it into three types of investments. The first one is your guaranteed investments, where your capital or your contributions, that will be guaranteed to a large extent. On the other side of the scale, you've got certain investments where you have no guarantees. So you can either get 100% return in a year, or you can lose all your money that you invested in that specific investment vehicle in a year. And in the middle, more or less, you've got your partially guaranteed investments. So I'll start off with the guaranteed investments come in two forms. It's either cash, so that can be cash in a money market account, or in a normal bank account. So the money is invested, or the money is given to the bank or invested in the money market account. Your capital is guaranteed, and you also get a guaranteed interest rate. So let's say that guaranteed interest rate will be 4%. So you are guaranteed that the 4%, that's what you'll get every year, 4% per annum. Plus you will also, let's say 100,000 Rand that you put into that money market account, that will also be guaranteed. The other type of guaranteed product are what I call debt products. So it can either be government bonds. So that's where you lend money to the South African government, and they give you, let's say, they guarantee your 100,000 Rand investment, plus they give you a 10% per annum return on that. Secondly, you can give a loan to a bank. Banks use the money to lend it to their clients, and let's say the bank will give you a return of 12% because the risk of the bank defaulting on this loan is higher than the South African government. Third one is corporate bonds, where you lend money to companies to use for either buying other companies or for their normal operational costs. And let's say corporates will give you 14%. And then the other one, as I discussed in chapter 3, is home loans that is granted directly by the fund to its members for the purpose of buying a house. So these are your guaranteed products. Your partially guaranteed products are products that gives you the security of guaranteeing your capital. Let's say you invest 100,000 Rand, so your capital will be guaranteed, but your return won't be guaranteed or only partially guaranteed. Let's say, for example, you take out an insurance policy, investment insurance policy, where the insurer says, we will guarantee you 100,000 Rand, but we will also guarantee a minimum return of 3%, but you can get, depending on, let's say, the money is invested in equities, you can get a return of up to 15% per annum. So the insurer will take that 100,000 Rand, they'll buy shares on the JSE. If the shares go up, you will get your guaranteed or get partially guaranteed investment return of up to 15%. If it goes down, your return will never be less than 3%, and your capital will always be guaranteed. The third type of investment is where there's no guarantee. So you invest 100,000 Rand, you've got an unlimited upside, but you also have an unlimited downside. So you can either double your money or you can lose all your money in 1 year. And here you've got different types of investments. The first one is equities or listed shares. Those will be your companies that are listed, for example, on the Johannesburg Stock Exchange. Secondly, you will have private equity. That will also be investment in companies, but these companies are normally not listed on an exchange. You can also invest in commodities and in gold. So all of those are your non-guaranteed. So if the gold price goes up, your investment return will go up. If the gold price goes down, your investment return will go down. There are, however, certain restrictions, and these restrictions on what you can invest and where you can invest and how much you can invest in any of these products, that is set out in what we call Regulation 28. So Regulation 28 prescribes to what extent you can invest in a certain asset class. So in relation to cash or South African government bonds, you can put 100% of your pension fund investment in there. Equities and bank bonds, you are limited to 75% of your investable or of your money that is available for investment in the fund. As far as corporate bonds are concerned, that is limited to 50% of your investable money in the fund, and you can now invest up to 45% of your total fund value in international assets. So those are the different types of investments you can invest in, and these are also the different, and there are so more restrictions that are there. So ask your financial advisor to sit down with you and discuss what are your options for investment by firstly looking at what you want to do, how much you want, what your investment target is for retirement, what your time frame is, and then choosing the right asset mix to meet your investment targets. Thank you.